Very good afternoon, everyone, and welcome to our investors and analysts and shareholders call for this quarter. As always, thank you very much for your interest in Renaissance Services. You've obviously seen our quarter results and you've read our chairman's statement, so I won't go into all of those details. I'll certainly mention one or two things from the quarter. You've seen that as we've been suggesting that we'll continue to sort of have a fairly flat result during this hiatus period with that downturn in Duckham occupancy, although we've started to see the upturn coming, as we told you last time. But that is being compensated by better performance in the other parts of the business. In terms of important things that have happened during this period, you may have seen our announcement of the appointment of a new CFO sitting with me here today, Juma Al-Khamisi. I know he doesn't require much introduction to many of you, and you'll have seen our announcement anyway. I think other important things that happened during the quarter, we announced the award of contracts from PDO and NAMA. One thing that didn't come from us but very nicely came from MSX, from the Muscat Stock Exchange, was their appreciation that we were one of 3 companies that has fully complied and reported with the new ESG requirements that, of course, become strict formal requirements from reporting for this year, but we've already done it for 23. So I think those are a few things from what's been going on in the quarter. And as always, rather than us talking, we'd much rather hear from your good selves. And so we open up the floor to your questions. So anyone would like to go first?
Joyce,
So, Joyce, welcome. Please go ahead with your question.
Good afternoon, Steve and Juma. Juma, welcome on board. Congratulations on the new appointment, and congratulations to the team for your good set of numbers despite a challenging operating environment. Could you please explain the situation at Duckham Village right now? What's the occupancy that we had during the third quarter, and at the exit of the third quarter, where were we? And as of now, where are we, and what are we seeing? Where do we see exiting the full year?
Yeah, so we've sort of landed at the end of the third quarter at an average of 6,000 for Duckham. And we forecast that we should end the year, this fourth quarter, at 6,500. And indeed, we achieved that average for the last quarter because we crept up to 6,500. It's gone off the boil a little during October. We're down at 5,700 at the moment with the end of one project and another slow to mobilize. So a little bit behind where we want to be for this quarter. So starting the quarter as we started the last quarter, and we needed to do the same again to achieve that. That said, we are pleased with the efforts that have been made on without diluting, customer service and performance in terms of continuous improvement programs, cost optimization. Some of the, we're looking at smart solutions. We keep coming back to our vision of wanting to lead the future with smart, sustainable service solutions. Well, we've been looking at a project with Lean Path to reduce food waste. And we've piloted that in Duckham, and it's produced some very positive results. And so we're driving down cost without diluting customer satisfaction while we go through this period. And that will stand us in good stead when we come back up. Looking ahead on occupancy, from the known things that we've got, we can see just from known histograms, an average of 10,200 next year, compared to, where we will end at around 6,500 this year. And going ahead with numbers, we've got 14,000, 15,000, and then we see it full after that. Now, there are other projects that can come. There are projects that can be slower than we've been shown these numbers. So we've seen the upturn of that low point in January of 4,000. The highest we've hit this year is 6,700, and we're about 1,000 below that, literally on the day at this moment. So a mixed bag as we go through that hiatus period, Joyce. Thank you.
Thank you, Steve. So this 3,600 you mentioned, was that at the end of third quarter, or is that the break-even point that you mentioned?
Sorry, I missed which one?
3,600?
No, I don't think I mentioned that. The low point we've hit is about 4,000 for this year. Okay. I think 3,600 may have been a number we've given you before, where we see sort of a bit to break even would be down at that kind of level. But so we continue to be a bit to positive. We need to come back up towards 8,000 to get to, and a little higher than that to get to past break even. But we certainly see that, with the forecast of 10,200 for next year. So yeah, those are sort of key numbers.
Okay, thank you, Steve. And which are the projects that we should be looking at for you to achieve this additional 5,000 additional people coming into Dukkam? Is it only the green steel projects, or are there any other projects, major projects that are coming in?
It's a mixture, but one of the main drivers of that going into next year will be the first of the green steel projects. So Jindal Steel, or Vulcan Steel as they'll be known in their project in Dukkam, have already got contractors staying with us doing the leveling of the land for the project, and they're expected to sort of mobilize more fully by the middle of next year, and that's to sort of start production in 2027.
Okay. Okay, thanks for that. And could you please touch upon the pack facilities? How's the mobilization for the additional capacity that we have built is progressing?
Yes, so that has gone very well, and is one of the reasons why, in spite of this downturn, obviously in contribution from, or the negative contribution from Dukkam in this year, one of the compensatory factors is this expansion piece in PDO. Where we've added 1,600 odd beds to our capacity now, and in 4 locations we've pretty much filled up, because they're at at the new levels of capacity. They're in the high 90 percentile occupancy. And we tend to regard, I know I've said this before in these sessions, 95% is sort of full by the time you do shift changes and etc. So so that's going well. Now in 2 of the locations, we've got capacity that in Baja that has not been filled. So we've added the capacity, but we haven't filled it. And we had some spare capacity anyway there, which was taken into account. And in Marmol, we've only partially filled the additional capacity. Now, This is not a complaint for our client because they have billed us very nicely in the other places, and there are genuine issues as to why they've not been able to meet their own expectation of moving people in those two locations. So it's not to berate them in any way, and we've understood, we're talking with them obviously on this, but we are expecting that situation to be resolved early next year. Bottom line is it's performing much better than last year, and then of course this part of the business performed well anyway. So we're performing well due to the expansion, but there's more headroom to go, and we can expect more from that going forward.
So if I understand that correctly, currently we are at 90% capacity on the total utilization on the total capacity?
No, if you go across the entire pack spectrum, we're at about 87%, and we want to be actually expecting to be 92, 93%. I'm saying what we've got in 4 of the facilities is higher, 95 type percent. And in 2 of them, we've got less. And it's in that less that is dragging it down to being under 90% at the moment. But that's still making a very solid contribution because it's 87% of the higher capacity that we're talking about.
I understand, and that's where you can make up for what is lost in Dukkha.
There's more to come. Yeah.
That's very nice. The another question that I have is on the chairman's report was talking about tax issues which you couldn't recover the tax shield in the earlier years, so we had to take additional provisions, and we are likely to take the tax provisions, tax shield during this year or starting from 2021. So could you please explain that, and will there be any? Do you expect any tax payment in 2025 and beyond?
Yeah, Juma.
Yeah. So well, actually, just to explain this, I think you have the history of this tax shield. So the tax shield we're expecting it to be applied from 2019 to 2025, 2026. However, during the filing the return for 19 and 20, the assessment of that says that actually the deregistration of that company is only happening in 2021. So this is why actually the tax assessment has imposed a tax for us in 2019 and 20, which is already paid. However, as financial impact, we have already provided the tax payables with assumption that there is no tax shield in that. But we are actually expecting the tax shield to cover us up to 2025 or 26, depends on the taxable income during those 2 years.
So does that mean we will write back some provisions, and for 2025 up to 2025 or 26 we will not pay any taxes?
We'll leave that discussion on once we finish the tax assessment for these years, which is still pending. So I don't want to predict the future. So let us discuss this once it is clear, and we will disclose it also once it's happening.
Yeah, but okay. It is a reasonable assumption, Joyce, that if you look at what our tax advisors are telling us, this is allowable against our profits. So the tax shield is allowable following the rules and regulations. Now that has to be agreed by the tax inspector when they actually inspect 2021. Because when they've inspected 2019, as Juma's explained, they've said, look, you can't have it for now. It needs to be from when you deregistered the company 2021. So whilst we still want to claim against the 2019, say, are you sure? Because the actual reporting of the numbers was then, and the impact of that. But so that claim will go forward, but also we will reclaim for this. Now, if as we expect they will allow the tax shield, then yes, it will apply from 21 for a 5-year period. And you know, the upside of that, if you want to, is that means the entire shield will be utilised. If it was from 2019 till now, then there'd still be a residue of about just over 3 million that we wouldn't have utilised. So that's what we're expecting. As Juma rightly said, we don't know that to be the case until the tax inspector has looked at it for 2021, which they'll do next year, and hopefully confirm that to us.
Got it. Thank you. Can I continue or should I go back in queue?
Joyce, you can keep going as long as you want, please.
Sure. Thank you. Next one is on recently there was a clarification from the Labor Ministry saying that the labor law gratuity allowances which you have taken last year, probably that might not be required going forward, or the application period is only from 2023 and not on a retrospective effect. So, and I understand that we have taken some provisions in 2023 financials. So, do you expect any write back of these provisions during this year?
Yeah, actually we have taken that into account, and we are evaluating that. We are expecting some upside on that once we have taken a stock for the entire staff in the company.
Yeah, I mean, there are two things really. We provided the full amount that extra 1.5 months would have applied. And indeed, some colleagues have left during this period and been paid at what the new regulation would declare that. But we would expect a reversal of about 560,000 for that.
Okay, so that reversal will be only 50,000-60,000?
Yes.
Okay.
560,000 in this year, yeah.
Okay, 500,000, yeah, it's 560,000. Yeah. Okay. So this is not included in the third quarter financials, right? It will come only in the full year.
Not in the third quarter, no.
Okay. And Steve, could you please explain, touch upon the Saudi Arabia operations? Is there anything worth mentioning about it?
So two things. One is we've registered the company there, but we've not put boots on the ground. Okay. However, there are 3 major PPP bids that we've taken part in now. Two new PPP bids that we are taking part in. One for staff accommodation for Saudi Aramco, and one for Zatka. The bid we've already got, and we've told you about before, about the border facilities, and that is still a live bid. We and our partners who we've gone with in the bid are still live in it. Now, there has been a change of scope because the client wishes to actually broaden the scope and is therefore looking for that additional scope to be factored in and a resubmission of BAFO best and final offer. So that is happening as we speak. They're very much confirming that yes, this project is going to go ahead, and clearly we are still in the mix.
Okay.
So, and I think, to look forward on Saudi, we've got to, we're looking at our business plan time. We've just done our strategy session with the board, and we definitely see when we tell you that our growth strategy is about diversify our services sectors and geography. The geography we're really going to go after is Saudi. Now, it's not a magic wand, particularly to have any high expectations of us doing that purely organically by taking our soft services and our hard services and expecting us to immediately compete or be an attractive option to a very well-served market of established players. But so we have to look at where we may provide that difference, that USP. One is in the long-term facilities management, the knowledge in build, own, operate in terms of accommodation solutions that meet the ILO standards at affordable rates, so that to attract the international financing for those projects. And that is very much on the project side in Saudi. They're asking and looking for that. And we've got very solid credentials and prepared to take that long-term view on such projects, as we did with our packs with PDO, as we've done with Duqm, etc. So that's somewhere where we feel that we are bringing something new. It's also, interestingly, even with the established players there, with what is going on in Saudi, and I think we all understand sometimes the announcements come and they're huge projects, and they might get pared back and put into some sort of stages that is not as large as the original announcements. That's fine as they sort of readdress these things. But nevertheless, the demand is for such services is greater than the current capacity in country to provide. So we think that gives us an edge as well. So we've delayed in terms of getting on the ground to have, a bidding team and a business development, etc., because we've seen it's tricky in just the pure organic play. Whilst there's nothing on the table, we are open to looking at M&A opportunities that would, particularly in the hard FM space or IFM space, but at the moment it's a very, a busy market, and so there's nothing, coming out in that fashion at the moment available that would be of interest. So those are the ways we're looking at it. We definitely see Saudi as part of our future growth opportunity. Thank you.
Thank you, Steve. You have answered my next question as well on the M&A opportunities. Thank you very much for that. And that's it from my side. Wish you all the best.
Thank you, Josh.
Thank you.
Thank you, Josh.
We are open to any further questions if anyone would like to go next. So we have a written question there asking what number of projects we're scheduled for Duqm in the next 3 to 5 years, and discussing them separately with current status. Okay, fine. So I think they do fall into the two major categories of projects that seem to be very real and going to happen. So the one that's already been touched on are the Green Seal projects. So we've been expecting them, and when are they going to get confirmed? And indeed, we have, some of their numbers factored in to the end of this year. And we've got a small amount come in, as I described earlier. We've got the people doing the groundwork for the Vulcan Steel project. But there's been delay as the project developers and the government have reached agreement on gas allocation, gas price, because they need the gas to transition as a greener source of energy before more and more renewable energy becomes available in Duqm with wind, solar, green hydrogen, etc. And although, as we've discussed before in this forum, Duqm is seen as a really positive space where a lot of green and renewable energy can be developed, and there are a number of projects happening looking at precisely that. So that's the first one that is expected. The second are Mitsui and Vale, Jindal Steel is expected to start actually in earnest as a project, having done the prep and build up midway through next year. Mitsui and Vale, we don't have their actual start date, but it would seem that they would be about 6 months or so behind that. So either the end of next year or the start of 26. Then there is the petchem project and the expansion of OQ8, the refinery. So these two things are important, and of course, neither is announced, but you've seen statements on them made by either OQ or the government in different capacities, where on the one hand, the expansion of OQ8 is seen as important and necessary to create economy of scale for the investment that's been made already. So the 230,000 barrels being expanded by another 30 to 40,000 barrels a day that they could take in is seen as an important thing to drive efficiency into the project. However, similarly, the project cannot fulfill its potential and add value to those 230 or 270,000 barrels, whatever it turns out to be, without the downstream projects of petchem. And so the discussions around petchem and which partners are staying in and staying out, etc., you'll hear as much market rumor as us on that. What does seem to be clear is that it is going to go ahead, and we can expect an announcement to that effect early next year.
If I may add also, to what Steve mentioned, so the project which Steve is mentioning, this is we already heard about and sound about, and also I want to add the investment environment is getting better in Oman. So Oman has been upgraded to investment grading, and we see a positive momentum for the investment in Oman. So more of foreign investment will come to Oman. That's what we are seeing, and from the economic point of view.
So, then beyond that, there's miscellaneous projects. There's talk of a new hospital actually going ahead with privately funded and so on. So, a range of things that those are not factored in because we don't have any numbers connected with that. But the major projects that we do factor in are the ones we've just described. So, thank you for that question. Would anyone else like to venture a question? And of course, we understand if there aren't questions as well, we'll have to get on to our chairman. He's obviously writing too clearly in his chairman's statement and answering everything for you, so you don't need us to back it up. We'll wait another minute or two in case anyone has anything, and if not, we'll wrap it up early.
Any written questions?
Well, I think Mohammed and Joyce have obviously asked all the questions that everyone had to bring today. We'll, I think, call it a day there, and thank you all for joining us and for your continued interest. We always enjoy having this exchange with you, whether it's half an hour like today or we take it up to the full hour. But we look forward again to seeing many of you next quarter when we'll be talking about our year end. We wish you all the very best and wish everyone a very happy National Day as well for those of most of you here in Oman. Thank you very much indeed.